How are y'all doing today? Bag FX bringing y'all another video. Today's video is going to be a market review of Friday's trading, this the 17th. This video is going to be a concept video. So I'm going to be showing you exactly how I see and look at the market due to ICT's teaching. That being said, let's just get right into it. So I do have the everything marked out already. But let's just start with the very first trade of the day coming into the morning market. So let's turn on our indicators. We have our silver bullet time frames marked out. There's 3 of them throughout the day. And then we have our sessions range marked out right here. And then actually we don't need this until later. All right, so now what's the first thing for our ICT London Judas is we wait for liquidity to be taken, which was took here. And then we wait for a market structure shift back into the opposite direction. So we had a low. Now we're looking for a high. Well, we're looking for a higher high now. We get a lower high. We get a lower low. We get a higher high, higher low. Now we have a break of the structure. We do have a fair value gap right here. It gets tapped into. And then all you do is target opposite session liquidity right here. And that'll be the first trade of the day. And that trade takes place during the silver bullet. Crazy concept, right? This yellow right here is a standard deviation. So if you don't know what a standard deviation is, I will show you real quick. It is the last leg before structure is broken. You take that, you mark it out, and you want to mark out 1, 2, 2.5, 3, and 4. Price is more likely to reverse somewhere around the 2.5, so be wary. Price does get down to 4 sometimes, yes, and reverses, but price can reverse generally anywhere between 2.5 to 3, but be careful. All right, second trade of the day. This is the New York ICT London Judas swing. It's the same concept as the London Judas, but this is just in New York. So what do? We wait for the London liquidity to be took, and it is taken right here, and we wait for after 8 o'clock. We get a market structure shift. We get a fair value gap left here. We get another fair value gap right here. This is the breaker structure. Enter in and target market liquidity, the London liquidity now. And then this right here would be your open range breakout. And you want to mark off 9:30 to 9:45. And then when you get a 5-minute candle that closes, we are on the 1 minute right now. But if you get a 5-minute candle that closes above this, all you want to do is target $30. I'm on NQ, so $30 from whatever breakout price is. And that's a quick little scout play. Got that from the great Q Banks. Listening to a podcast and back tested it, and it's a great strategy. Then you have your 950 to 10 micro move right here. So normally what happens is some type of liquidity will get taken, which as you can see, we did right here. We took liquidity, and then we went down, failed to get back up. So we have our lower high, lower low. We have a market structure shift going into our ICT silver bullet time between 10 and 11. So here you have the confidence to target back down this liquidity, and you target this liquidity. After this liquidity is taken, what are the rules of the ICT silver bullet? Is the first liquidity to be taken during 10 and 11 You want to wait for a market structure shift back up to the other direction. So we don't necessarily get a full close because on a 5 minute candle, this would have been the high. This would have been the low. So we had a lower low, lower high, lower low. So we still don't have a break of structure or a market structure shift. I'm sorry. So going into this fair value gap, now that this one is respected and we haven't had a break of structure yet, we know we can target our ICT silver bullet trade, which is we target $30 on NQ, or if you're on ES, you want to target $5. You just put your stop above your fair value gap candle and you target your $30. Now, this one just happened to be damn near almost on the money. If we would have got in on the midline, aka the consequent encroachment of the fair value gap, we would have got somewhere out up a little bit higher. But due to the getting in at the beginning of the fair value gap, gotten a little bit lower. Generally, you do want to enter in on the halfway mark of these fair value gaps. That's a better rule of thumb. You want to see a wick into it and close down. Going into the last couple trades, this will be the 11 o'clock reversal. That normally happens between 11 and 12. Did not trade that at all because we were in a downward market. We failed to get a higher high, correct? We got a lower high, lower low. So now this is our market structure points right here. Right here, these are our market structure points. Whenever one of those are broken, then we know which way price is going to go. And as you can see, we got that. We got a break here. We got a retest of that area, basically. We had a fair value gap. I always enter on a fair value gap and an order block. So you have an order block right here, which is this last down closing candle, these two down closing candles before we move up. And we have a fair value gap. So this is a double confirmation. And it's in discount of all of this whole move, this whole leg right here. This is all under the halfway point of this move. So that gives us confidence to go ahead and get in low, buy low and sell high. And at that point, we would be targeting New York liquidity. So the high of the New York session, which is here at 820, we would be targeting that. And then after that, you want to target a higher time frame PD array, which here would be our 15-minute fair value gap. We're on the 1 minute chart. I trade on the 1 minute. A lot of these moves, you wouldn't catch them or wouldn't see them on a 5 or 3 minute. So we target that. Me personally, I got out right here. And then price ended up hitting the midline of this fair value gap. Came back down. We had a market structure shift, as you can see right here. We had a high, low, lower high, lower low, left the fair value gap. I believe this was on the 5 minute chart. There's a 5 minute fair value gap, but as you can see, there is a one right here on the 1 minute. I took the 5 minute one, and then price broke down. We had a retracement. This leg that caused the low never was broken, so this is our market structure right here on the 5 minute chart. Here and here, never was broken. Enter here, and now from the here, you want to target the low of New York as well as a higher time PD array, which right here, I think I have it marked off. No, I don't. This is the 1 hour. This is a 1 hour fair value gap. So this is what we would be looking to target after. We want to go from PD array to PD array. So we tapped into a 15-minute fair value gap and came down. Started a market structure shift down to the downside. So we have to target liquidity around here and around here. That's the New York low. And then after that, you want to target this liquidity right here. And this liquidity is backed by a 1 hour fair value gap. And then if I go to Thursday real quick, you can see it's the same thing. It's like, here's your 8 o'clock London breakout. We broke the low, got a market structure shift, target the high. Here's our 9:30 to 9:45 breakout. We got a breakout. We targeted 17 on this one. I believe that matched up with a PDA that was like somewhere back here. And then our silver bullet, we took out liquidity right here at 10:06. Got a market structure shift, this red line, fair value gap entry. And then all we do is target some lows of the day, which you have here and here. And that's it. But you just get your $30 and dip. That's it. Like, I don't know how else I could possibly explain, but yeah, this is basically how I see and try to trade the markets every single day. I hope you guys learned something and enjoy and have a great weekend.